Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I'm Kevin Hincks. We have two paper money trades for you today on high-profile names. Nvidia, that is the beneficiary of all this CapEx spending, and then one of the firms doing the CapEx spending today, Meta Platforms. We'll look at both of them. One is significant because it's the beneficiary, the other significant because it made the announcement this morning and has earnings next week. So we'll get a way to look at both of those. First and foremost, let's look at Nvidia. Think of what's happened in the last weeks and days, frankly, to this market. A week or so ago, 10 days ago, 2 weeks, Microsoft announces $80 billion in CapEx spending for 2025 on AI. That energized stocks. Well, this week, how about $500 billion from the Trump administration and Stargate, which includes OpenAI and SoftBank and Oracle. $500 billion in CapEx in AI infrastructure spending. And then this morning, Meta Platforms, $65 billion in AI infrastructure CapEx spending. We're going to talk about Meta in a moment, but that was all these. Where do you think all this spending is going? It's all going. Do you trade the names that are doing the spending, or do you trade who they're paying for the AI chips? And the beneficiary of all this spending is probably going to be Nvidia. And so we looked at a paper money trade in Nvidia, if you believe that. We looked at a paper money trade in Nvidia going out to the February 21st expiration and buying the 148 call, the at-the-money call in Nvidia, and then going out to next week, looking at the expected move of about $6. Now, when we did this, it was trading about 148. It's a little lower now. So we're buying the 148, selling next week's January 31st, 155 call, right in line, $6, $7 higher. You can adjust that strike if you want to. Remember, the most important part of this is the strategy, the call diagonal, buying further out, selling short-term data, collecting that theta, the calendar spread with the built-in vertical spread, making it the diagonal. So a bullish play on Nvidia, buying February 21st, that's 28 days, 4 full weeks from today, and then selling next week's 155 call. Can you adjust those strikes? Of course you can. When you put the trade in, you may want to adjust those strikes. Right now, I put this in at about $5.10. It's trading about $4.70 right now. It's sold off a little bit post open here, so it's trading about $4.70 now. But the 148, 155 call diagonal. Remember, the risk is on a call diagonal is what you spend. So if you spend $4.70, $4.80 on this, that's the risk on this trade. You can extend duration on this trade because it's basically 3 weeks. The duration on this trade, the difference between the long and the short is 3 weeks. You can extend duration, thus chipping away at that net debit, also chipping away at the break even. Okay, that's our trade in Nvidia, the call diagonal. Now, let's get to our second trade of the day, and that is Meta Platforms. They are the ones that came out with the CapEx spending number today. And remember, they said between 60 and 65 billion, leaning towards that 65 billion. Well, the expectations were between 51 to 58 billion. So they're spending more than the street analysts thought they would spend on CapEx. And here's one of their statements. We're building an AI engineer that will start contributing an increasing amount of code to research and design efforts. And so remember, when Meta Platforms is all in on AI, and the more and more that AI increases the user experience on Facebook and Instagram and WhatsApp, what that does is it makes them a more efficient platform, thus increasing the chance that more advertising, digital advertising dollars will come to Meta Platforms. And how they spend their money, remember, stock traders, investors get sensitive when CapEx goes too much. You see it in Amazon, you see it in Meta Platforms. It got real unpopular there when CapEx was not, they felt not being used its best. Well, the market, the stock opened down. It was up this morning, then it opened down. It opened at $636. It's now trading $642, so it's up $5.50 on the day. So what we want to look at though is, remember, Meta Platforms has a January 29th earnings event. So you look at the earnings event, the expected move for next week, about $50. It's 49 and change. Traders like to round. We'll make it $50 is the expected move next week. Now we're going to get a one-day move. That'll come out on Monday, but the 1 week move is $50. So what I looked at here is just a way to use that inflated level of implied volatility. It's up to around 68 in the January 31st and only about 54 in the next one. I looked at something just in the calendar spread family, and that is buying the February 7th 700 call and selling next week's January 31st 700 call. Now, I put that in about 220. I think it's trading right around 210, so it's trading a little lower than that. But remember, this is a calendar spread targeting the 700 level in Meta Platforms, right in line with that expected earnings move. Now, if you think, remember the risk on this trade, the debit spent. If you think that Meta Platforms, like a lot of names now, has run far and maybe it can't, I think a lot of themes for this earnings season is, can they get earnings enough to hold stocks at these levels? And if they can't, like American Express this morning, you see some weakness in the stocks. So it could be, it's $50. It could be the 700 call calendar, it could be the 600 put calendar, right? Either one of those will be trading at a similar level. So, but the risk is the debit paid. You're collecting theta, you are risk defined, and you are targeting, like in all calendars or diagonals, that short strike, which in this case is the 700 call. Spending about $2.10. All right, that's Daily Trader for today. Gave you two paper money trades, one in Nvidia, the call diagonal, and the earnings event play, the call calendar in Meta Platforms. Have a great day, everyone, and a great weekend. We'll see you Monday morning with another edition of Daily Trader. I'm Kevin Hincks.